Alright guys, welcome. Hey Alan. We're gonna wait, let's see, a couple more seconds here. But in the meantime, make sure you guys smash that like button down below, as always. And if you guys are new here, consider subscribing, and on top of that, hit that notification bell too, so that you guys know when I'm live, right? You guys will be notified when I'm live or when I have uploaded a new video, just like I did yesterday. So if you guys didn't know I uploaded a video, well, that's because you did not subscribe and did not hit that notification bell. So make sure you guys check out the video that was uploaded yesterday. Hey, what's up guys? Welcome. I'm just starting, so you guys did not miss out on anything. But make sure you guys take a look down below in the description box, because I want you guys to read the part where I say swing trade idea for IWM. So make sure to stick around to the end of the stream. And again, it won't be too long. Don't worry guys. I'm not gonna take too much of your time of your nightly routine here. But yeah, let's get going. A bit laggy, cutting in and out. Let's see. Is it? Let me make sure. Let's see. My playback on my end is okay. But yes, please let me know guys if I'm going in and out, because I do not want that to happen. Yep, I am good on my side. Alan, you might want to just try to reload. Here, let me check on my phone. How about that? Since I'm looking at my my playback here. No, my phone is good too. Yeah, you guys might have to reload whenever that occurs. I don't know what's going on lately with YouTube, or maybe it's my streaming platform, but I have been having issues like that, so. I see. Okay, well, hopefully you guys are able to at least watch the replay and there aren't any cuts. If there is, my apologies. And I'm not a tech-savvy person when it comes to audio issues like that, or I don't know, maybe it's probably a connection issue, but alright, okay. Welcome guys. Hey, 4 likes, awesome. Let's get that to 10 as always. So we're going to talk about IWM, alright, small caps, and well, specifically mid caps, but hey, I tend to group them together, as you guys should know, those two assets together. So IWM and mid caps, so they have been obviously lagging since, well, last year. Well, I say last year because they topped out a lot earlier compared to the overall markets, and you could say that IWM and MDY, which is mid caps, could have been a potential leading indicator, but hey, these two asset classes are always lagging behind the markets, and there's a lot of reasons, a lot of factors that play into IWM and MDY being such laggards, big laggards in the market. But I'm not gonna go over that. I went over that plenty of times in 2024 and in 2023 actually. So so for anyone who has been a reader and a member for a while, you guys should remember all those reasons and factors. But I'm gonna be speaking specifically on the current I guess factors that will most definitely influence IWM and MDY, and give you guys kind of a technical breakdown as well, and in order to obviously give you guys that swing trade idea on IWM itself. Okay, now first of all, I and everyone at Charts Focus 1 are focusing on something very similar to what occurred in mid 2024, specifically in mid to late June all the way up into early July of last year. And why am I saying that specific time frame? Well, that was exactly when we positioned ourselves really well, as seen here on this weekly time frame chart, where we were really honing in on and hawking IWM for most of May and most of June, because we were able to grab a very, very nice position at this $200 whole number level, right? And I believe we officially, well, all of us together, from a time frame range, we take a position around mid-June, so around this candlestick, all the way up into late June, all the way up into early July, actually, here on this weekly candlestick. So that's interesting because we are kind of seeing the similar factors playing out here, specifically seasonal trends, right? And small and mid-cap assets do extremely well heading into late quarter 2 and all the way up into early quarter 3, and that's exactly that's one of the major reasons and factors as to the reasons why we were looking and hawking IWM last year, and obviously that paid out handsomely here, right? Of being able to look at this ticker, and many of the members were able to follow along this analysis, and they executed perfectly. And even following after this monstrous move to the upside, and obviously that very rapid profit taking that we saw, because again, IWM is burdened by a lot of supply issues from a technical perspective, not from any type of other macro perspectives, but this one continued to come back down, and it hit that $200 psychological level once more, and IWM continued to be a very strong ticker to hold all the way up into late quarter 4 of last year. So this is the kind of environment that we are currently in, and I think we can start to see a similar environment starting to play out soon for IWM. Now, obviously, we had a major correction across broader indices and the broader markets, so there we are slightly in a different market environment from a macro perspective. But when it comes to especially rate cuts and yields and the Federal Reserve, IWM and MDY are not just severely, but just heavily influenced by all of those 3 different things, right? Yields, the federal funds rate or interest rates, and the Federal Reserve, and what Jerome Powell specifically says. So, last year we also had the anticipation going into quarter 3 that we were going to be seeing these rate cuts. Well, the very first rate cut coming in, and if you guys remember, I was able to correctly predict that we're going to be seeing our very first rate cut in 2023 of quarter 3 of 2023. Excuse me. I said, let me rephrase that. So I correctly predicted that we'll be seeing our first rate cut in 2024, all the way back in, I believe it was around late July to early August of 2023, and that's exactly when we got our first rate cut in 2024 in quarter 3, right? So I think IWM is currently, just from what I've been seeing so far, moving and potentially can move in the next couple of months based on that rate cut anticipation. Well, rate cut continuation anticipation occurring in the next couple of months, especially into the next FOMC meetings, specifically July and September FOMC meetings. Okay, and that is very, very important to remember, because again, seasonal trends favor IWM and MDY to move and have a lot more strength compared to the overall broader markets like the S&P 500 or Dow Industrial Jones, or even just NASDAQ at some times. From a historical perspective, from late June to most of July. All right, so make sure you guys are writing this down, or at least go back to the replay of this stream once it's done to truly understand what I'm saying here and memorize what I'm saying here. Okay, so with IWM, from a technical perspective as well, looking very, very good. So now let's dig into how the weekly time frame looks, and then we'll go back down to the daily time frame as well. So weekly here, amazing consolidation, right? For the past 4 weeks, we've been making a very tight flag, right? This nice high and tight flag after making a very, very large pivot from these major lows, right? We reached the ranges, the support ranges that we were in and stuck in for 2+ years, right? And this is what I gave you guys as well. This chart, this entire chart right here that you guys see here, was given in 2022 and in early 2023, right? And so the price was able to find some major demand around the lower range support area of this huge 2+ year, multi-year macro base, and we're able to continue to move to the upside. But here's the thing, right? We are still very much, I would say maybe we have retraced like 50% of this move down so far, maybe a little over 50%, right? And for the markets, we're nearly back to the current all-time highs. Like if you take a look at the S&P 500 ETF or ticker symbol SPY, we're, I would say like what? Let me actually just take a look at that. We're like, this is like what, 90% retracement back towards the highs here, or at least recovering the entire market correction that we saw, right? So 85 to 90% is what I would say. So just from a visual perspective here of what I'm observing, and IWM is most definitely a little over 50% maybe. So what I'm trying to say here is that IWM, MDY, they're all very much lagging compared to the broader markets, which is the reason why we should be focusing on these laggard asset groups like small caps and mid caps, because when their seasonal trends are coming up into late June and most of July, there's a good chance that we see kind of this internal asset rotation, not sector rotation, but asset rotation from the S&P 500, even NASDAQ, right? DJI, Dow Jones, and Dow Jones. I can't even speak today. You guys know what I mean, right? And seeing kind of that money rotate out from those leading, broader markets and into these laggard asset groups, right? So that's kind of what we want to see, and we've been seeing signs of this internal rotation occurring for the last 2 weeks, and I provided very specific observations and data points for the last 2 weeks in the CFO Swing Watch report. So if anyone who's watching right now and is not a reader of this report, make sure you guys look down below in the description box to find that link of the CFO Swing Watch report, and you guys can become a reader tonight, and you guys will be able to receive the last 2 weeks worth of reports, because again, I specifically talk about what I'm talking about right now, right? So I'm not going to talk about them here because it's quite a lot. If you guys really want to read it, make sure you guys become a reader tonight, and obviously you guys will become simultaneously a private member of the private CFO Discord community. And again, you guys can find all the information down below with the link provided in the description box. You guys will be able to find it. All right, if you guys can't find it, let me know. Or if you guys have any questions, please DM me on Instagram at chartsfocus1. Again, my handle for Insta is at chartsfocus1. Okay, so now with this nice high and tight flag on the weekly time frame, I love the fact that we've been consolidating at the highs and very, very close to the weekly 21 SMA. And again, you guys know how much I love my momentum short-term SMAs, right? The 10, the red line here, and the 21, this light blue line here. And I'm very, very comfortable with how they move, and I can almost precisely predict where they could go next, right? Because I've been working with them for 8+ years now. So, and it's the same goes for everyone else who might be using EMAs, right? And they can also provide some pretty accurate predictions of where their EMAs can go, and it's the same for me, right? So it's all about experience, right? With whatever technical indicators that you're using, right? I don't care if you use EMAs, as long as you know what you're doing. Continue to use them. Right? I have no qualms with whether or not you use EMAs or SMAs. They kind of serve the same purpose. They just have different ways of calculating them to be appeared on your screen, right? This is what I would simply say. Okay, so my SMAs here, the weekly 10 and 21, I love the fact that the price is sitting very close to this weekly 21 SMA and has been consolidating for 3 consecutive, well, I guess I should say this week as well, 4 consecutive weeks so far, right underneath this weekly 21 SMA. Why is that important? Well, that clearly states that we're in control, and it's not a losing battle between the bulls and the bears, where the price might come back down to retest with the weekly 10 SMA here. And rather than doing that, the bulls have been able to stick the price very close and very tight underneath the weekly 21 SMA without having to revisit the weekly 10 SMA multiple times, as we usually tend to see during periods of consolidation on a weekly time frame. Does that make sense? Right, and on top of that, the bulls have been able to avoid retesting the weekly 200 SMA as well. So this is a very, very significant long-term SMA support that you guys should always have on your weekly time frame charts if you guys use SMA, simple moving averages. But if anyone else uses exponential moving averages, again, EMAs, you guys should also have a 200 EMA as well if you guys choose to use them, right? So, you know, about the fact that this price action has been very, very favorable for bulls, trying to avoid retesting major areas of support, which again clearly tells us, it indicates that bulls are bidding the price up higher and keeping, that's the most important thing, keeping the prices higher. Okay, now on the weekly time frame, before we move down to the daily time frame, we have a major level of resistance forming on this nice high and tight bull flag. I would say it's a Momo flag. Again, there's a lot of momentum in this bull flag. How do we know? Because again, we've been sticking to the highs, right? We've been sticking to the resistance areas where we should be seeing a lot of supply, a lot of rejections coming in, but the price has been able to keep at the highs here at the supply areas because the buyers are present. And so this major resistance level that I'm talking about, or this kind of supply area that I'm talking about, is at this 210 level. And I even mentioned this in the private CFO Discord today during trading hours, and we were able to nearly hit this 210 level already, as the current high of the week so far is at 209.61, which we achieved today. So we're starting to see a lot of bidding coming in again for IWM and MDY. If you guys are not looking at MDY, which is the mid caps, and you know, obviously IWM tends to be a bit more liquid because people tend to look at small caps a lot more, as they tend to be a very good asset group to look into to trade, because they're a lot more liquid in some sense, depending on what you look at, obviously, but most people tend to concentrate on IWM compared to MDY, since IWM is a little bit more attractive when it comes to very rapid, very volatile moves like what we saw in July of last year, the year which gave us that 400% plus return on that swing trade. And again, absolutely amazing, right? And then we got some even more subsequent amazing returns, triple-digit percentage returns on IWM after the following months of July. So that's kind of exactly what I want to see too for this upcoming month and into the end of this year, right? And also, this is all predicated on the fact that we should be seeing a continuation of rate cuts sometime in July or September, depending on what Jerome Powell says and what the Federal Reserve decides to do for the upcoming June FOMC meeting. And again, June FOMC meeting is going to be held, let me make sure I get the dates correct here, on June 17th and 18th. And obviously June 18th will be when, which is a Wednesday as usual, which will be the rate decision day, and also when Jerome Powell speaks during his news conference. Okay, but again, IWM will most definitely move in anticipation and perception of what the future will likely hold for the current monetary policy for the Federal Reserve, and what their plans are for the current federal funds rate, or again, benchmark interest rates. Again, they're kind of synonymous names there. All right, so with that being said, if you go back on the daily time frame, okay, we are looking pretty good, pretty solid price action today with increasing volume on the daily time frame, and we're still riding above my daily 10 and 21 SMAs, which clearly indicate that we are seeing consistent bidding from the buyers here. So this is very important to understand. Why? Well, first of all, we continue to see buyers upholding the daily 10 and the daily 21 SMAs, which is a good sign from a short to mid-term perspective on a daily time frame. And so if we were to break out of this 210 resistance level, hey, what's up guys? Welcome in. Make sure you guys hit that like button down below. And obviously I can see your guys' your reactions in the chat room. Awesome. Thank you guys. And by the way, is everything making sense so far? Hopefully it has been. Okay, but if not, please ask questions down below or in the live chat room and I'll be happy to answer them. Okay, so IWM, this 210 level is very critical. I most likely will be looking at this tomorrow, and there's a high chance that we could be seeing a breakout, but an equally high probability that we can reject it once more, because again, who knows, we might be having to develop a little bit more tightly underneath this 210 level like what we saw here, but ultimately we rejected lower, and obviously we were able to come back down to retest that psychological $200 level again, right, before we pivoted back up higher. So there's a lot of pushback from sellers at this 210 level that we see on the daily and weekly and even on the monthly time frame too. So check that out on your own respective charts. But if you were to break over 210, I am most definitely targeting the daily 200 SMA, which has ideally flatlined at this 216 level. And I love when the daily 200 SMA flatlines here. Why? Because that means that there is a great not even just a greater possibility, but this is our probability that this is a cherry on top to what I've just told you guys about on this bullish biased analysis, that this daily 200 SMA, when it flatlines like this, there is a greater probability that the prices will be able to rapidly move up higher to reach the daily 200 SMA and retest it, rather than seeing the complete opposite where the daily 200 SMA starts to curl down and it tries to catch up to the price. Because if that occurs, that usually tells me that the price is actually staying down here, being bogged down by sellers, or maybe we start to see lower highs and lower lows, indicating that a new downtrend is forming, right? So we do not want to see the daily 200 SMA, this yellow line here, curling downward or beginning to actually move downward to meet up and catch up to the price. So this flatlining is very ideal, right? We want to see very consistent flatlining around this 216 whole number level, which again aligns with this next resistance level that I've had. And if you guys remember back in July of last year, this is a very significant target level. And so I am most likely going to use this whole number level as a target level once again, and most likely the next one as well, 227 and then 233, depending on how we move heading into late June and all the way up into July. So most of early quarter 3. Okay, so when it comes to IWM now, all right, on the daily time frame, you guys have to be watching out for some macroeconomic news as well, because IWM will most definitely be affected by, for example, inflation numbers and other indicators that the Federal Reserve looks at, like PCE reports, which is their main report and value to look at to determine how they will go with the federal funds rate or rate cuts, right? So which is, again, this is what you guys should know already, the baseline information that you guys should know. If you guys don't know, make sure you guys become a reader of the CFS Swing Watch report so you guys can be up to speed as to the actual no BS information that you guys should always be on watch for, right? So on the daily time frame, again, we have a pretty solid looking inverted head and shoulders chart pattern forming out as well. I mean, this is kind of an I would say unconventional inverted head and shoulders, since we have a very massive inverted head here, but obviously the neckline resistance level on this inverted head and shoulders is definitely the 210 whole number level, right? This resistance level. So I would say have an alert set up tomorrow for 210 for potential break. If not, just if you do, if you do see a retest of it tomorrow, and if you see a massive rejection, that's fine. We're still most likely going to be consolidating to continue to form this inverted right shoulder between this 204 and 210 price levels, right? And we're most likely going to continue to range if we do see a rejection at 210. All right. Again, the volume today was very nice, not bad. It was over the average daily time frame volume, but then again, for the past couple of days here, right, pretty consistently, we've been seeing increased volume anyways. So today's increased volume was not that significant from just based on how many volume bars, well, trading days that we had, where the volume bar was over the daily average volume. So today was not that significant of a day where we saw an increase in volume that was over the average daily volume. But at the same time, this is a very nice thing to see as we are inching towards this massive neckline resistance level sitting at $210. Does that make sense? Hey, and we have 2 more subscribers as well on YouTube. Thank you guys. I just saw that. We just jumped up to 508. Nice. Awesome. Hopefully I get, well, hopefully I can keep you guys here as a subscriber to the channel. Great. So again, IWM, very, very nice looking here. All right. Now, okay, now. I do believe there is a different, here it is, right? So IJR is also another a small cap ETF that you guys really want to look out for. This is the iShares Core S&P small cap ETF. All right, I'm not going to go into what this ETF has. You guys can look it up on Google, simple search. But the reason why I'm bringing this up is that, well, maybe this might be a more viable option for you guys if you guys are using equity to trade IWM, right? Obviously this is a lot cheaper. So this is something that you guys might want to consider. I mean, there's very similar price action, and this will most definitely move in a similar manner if IWM breaks out, because why would it not? Okay, but obviously IWM looks a lot better to me, especially since I'm going to be using option contracts rather than equity to trade this, right? And why? Because it's just more leverage, and also IWM again has that volatile characteristic when it decides to break out massively, like what we saw in July. And I think Joel, you too, in the chat room, I think you were part of that back last year, that 400% return. I think it was less than that for you specifically because you got in a little later. But hey, triple-digit returns all around for everyone. We were eating, thanks to that position that I brought up. But talking about positions, okay, let me give you guys that IWM chart. Excuse me, that potential swing trade that you guys can get for IWM. So let me give you guys. Let me show you guys this options chain here, as provided by Yahoo. All right, so we will be looking at the June 20th expiration, right? The monthly expiration. Okay, Alan, you said learning a lot here about 200 MA and other MA timeframes. Seems like you have a lot of experience over trends in the past years, which is nice to see. Transitions of liquidity in the market. Yeah, so obviously, if any of you guys use EMAs, don't try to exactly overlay my technical analysis with my SMAs to your time frames and your respective charts, but just understand that I have significant levels, and the reasons why I have these significant levels is that I have these SMAs that I use, right? And I'm very, very comfortable with them, and I could literally kind of predict almost accurately to where they might go next because I have experience again, right? So what Alan said. Okay, so this well, let me go back to what's happening here. So June 20th. All right, this is the monthly OPEX date for the month of June. And this is looking very, very interesting because I am very interested in this 215 strike call option contract, right? There's a huge amount of OI and a good amount of volume. But at the same time, I'm also interested in this 210 strike. Why? Because there is an opportunity for oh no, Joel, Alan is in the but thank you, Joel. Thank you for that review there. But he has just recently become a reader of the CFO Swing Watch report and is a part of the Discord. He is one of the new additions to the community here. So welcome, Alan, in. Okay, you guys have already actually met in the Discord. If you guys didn't know, I'll let you guys know what Alan's Discord username is. But no, you're good. Yep. There's his username, but yes, we've been friends for 6 years. Yep. So, and Joe, I think you've been my student for almost 3 years now, I think. What is it? Right? Almost 3 years? I think so. Right? So anyways, let's go back to the options chain. So I'm in particularly interested in the 210 and 215 strike, not just because of the volume, kind of the similar volume that we have today and the similar OI that we have, right? But because of the fact that there's an opportunity for vertical debit spreads, right? So obviously, what was my target, guys, for a breakout over 210, right? 216. Right? And so if we were to use these vertical debit spreads where we sell the 215 strike call contract to finance the buying of 210 strike call contract, obviously you guys don't have to do this if you guys are able to purchase multiple contracts of 210 or 215 and these contract premiums aren't expensive for you. Awesome. This is I'm just giving you guys options here, but giving you guys a vertical debit spread, which I love to use, right? And you guys can use butterflies too if you guys want, but there's no point when we're about to have a potential net directional move to the upside, right? So these vertical debit spreads can obviously they do limit your reward, but at the same time they limit your risk too. Well, not limit, but they define your risk, right? And so this 210 and 215 strikes can be very, very useful because if my target is 216, right, as seen here, and also for a potential retest of that 200 SMA on the daily time frame, okay, if we reach 216, we'll be very much in the money with that vertical debit spread, right? We'll be over the maximum range of this 215 and 210 vertical debit spread. Does that make sense? Right? So this one should be very, very much in the money, and the underlying share price will be over the range of this spread, and that's exactly what we want, right? Ideally, whenever we play vertical debit spreads to the upside or to the downside when we're using puts or calls, we want to make sure that ideally before or near the end of the expiration date, or near the expiration date rather, we want to see the price at the maximum range that we've set for that vertical debit spread, right? So in our case, we want to make sure that the underlying share price is at 215 or at the very maximum over 215, right? So that we're maximizing the profits that we can grab from these vertical debit spreads. Okay, so I would highly recommend you guys to take a look at the 210 and 215 strike call contracts on the 6/20th expiration date. So that's the monthly OPEX date for June, and this is all predicated on whether or not well, if you can break over 210, right, as I've been talking about for the last couple of minutes. So again, if you guys can choose to just play these naked call options, 215, 210, all the power to you. I wouldn't recommend it if you guys can afford it, but if you guys can, awesome, right? to buy multiple contracts with these premium prices of 210 or at 215. Or you guys can choose in between the ranges, right? Like this 212, right? Seems like so there are traders piling into this 212 level as well, which will be in between that 210 and 216 levels here, right? So again, whatever floats your boat, whatever is good for you guys, it's good. Choose those, right? You don't have to listen to what I am recommending here for the strike prices. And Alan, you said 200 has 130, 173 OI2 on the short side, but I guess I'm gonna but I guess Gamma's decided on the PA around 620. Yeah. So you can go to the shorter expiration dates as well, maybe June 13th, right? Because again, I'm just focusing on the short term for now, right? Obviously, if we exploded over 216 and over the daily 200 SMA, awesome. Right? So it's like what we saw in July in a short couple of trading days, and well, specifically 5 trading days, right? That's where we exited here, right? That'll be awesome to do that as well, which is why I'm going to be maybe using both 2 different layers of positions, the vertical debit spread and some naked call option contracts. But this is my biased position that I would want to take for IWM if we do see a nice breakout over 210. I think, Alan, my subjective opinion on that question of if I think Gamma only really applies for shorter expiration or 0 DTE, I think it could depend. I mean, I would say shorter expiration date, Alan, to be honest. But also I can find reasons for both, to support both. But again, I'm not too experienced with 0 DTs as well, because again, I'm a swing trader. so my bad, Alan, for that perspective. Since I know you tend to do a lot more shorter terms day trades as well and scalps. But yeah, I would say shorter expiration. I mean, I'm sure you can find different opinions out there. Yeah. So, that's just my subjective opinion. You can take it with a grain of salt. I'm sure there are better opinions out there. People who are a lot more experienced with the 0 DT and even shorter expiration dates. But again, I tend to look at, yeah. So, with IWM here, that's kind of my outlook. Obviously, we have more of the mid to longer term perspective as well, as I've stated already, surrounding the analysis on, well, not even just an analysis, but the outlook of what the Federal Reserve will do in Q3 in regards to interest rate cuts and the federal funds rate. And there's a lot of pressure on the Federal Reserve now due to the tariffs and the trade war, and obviously the economic contraction that we could potentially be heading towards into Q3 and into even next year already. And if you guys remember, back in February and January, and even most recently in April, I was telling you guys that 2026 might just be a year of trouble for us from an economic perspective, not for the stock market, but from an economics perspective. I gave you guys plenty of reasons and plenty of information as to why. So again, go back to the reports a couple months before and just read them, right? Read them. And that's the best thing that you guys can do for yourselves. Is always read the reports, especially the previous reports as well. If you guys are wondering which reports to read, just let me know, ask me, and I'll let you guys know. Okay, so yeah. And Alan, you said, do you swing longer dated for your risk tolerance and less dated? Yes. So this is my own subjective kind of cup of tea. This is what I found to be a lot more in line with my own perspective, my own technical analysis, which is why I've made the CFO Swing Watch report too. Right, we're looking for swing trades from couple months out, couple weeks out, maybe even position trades where we hold on to something for months at a time, right? Or we look for specific tickers for longer term investing that, maybe we buy leaps on option contracts that go out to 2027 or 2026, right? So it all goes down into the company, the fundamental analysis that I provide in each company, and obviously the specific technical analysis for each individual ticker. All right, so there's a lot of nuance to that, but yes, generally speaking, longer dated just because of my own personal risk tolerance, which is again very unique for everyone. Again, I never try to put my own risk tolerance and what I like to do on anyone else, because again, everyone's unique, right? We all have our different risk tolerances and risk management, and how much we can be willing to risk, right? For me, that's just for the longer term, and I have a lot more peace of mind, especially when it comes to option positions, to be able to have longer dated expiration dates and be able to allow the underlying share price to move in my favor, right, and give more room for them to move to head towards my own 3-point game plan and fulfill my 3-point game plan rather, and obviously hit my targets and to fulfill the targets that my option contracts have. Well, the option contract that I've chosen, right? Because just like I said, with the strikes, right? If 215 is my strike, right, for my potential naked call option position, well, you know, I would hope that the underlying share price goes to 216 and retests with this flatlining daily 200 SMA. So again, this 200 SMA is coinciding with this whole number level of 216, which again was a previous target level that we had last year, and we obviously blew it out the water, right? So, you know, all the same levels are still in play, right? Obviously, you can tell by the price action at the $200 whole number level, the 204, 210 now, right? So, you know, as long as we can see a very solid move over 210 tomorrow, or at least into the end of the week, I'll be setting my alert here overnight, and which I highly recommend you guys to do as well. And again, if you guys any of you guys out there aren't comfortable playing the naked option contracts, or are not comfortable with the risks that come with these option premium prices, again, giving you guys an opportunity or an idea to have this vertical debit spread, right, where you sell the 215 strike call contract to finance the buying of the 210 strike call contract. And obviously, you guys can do the math there, right? Just subtract $348 and to $158 here, and you guys can get the rough estimated price of what you guys will be paying to enter those spreads. Okay, so yeah, you guys have your options there. But that's it for me tonight, guys. Hopefully you guys you know, enjoyed the stream here as usual. Oh, by the way, guys, before I leave you guys here, there's gonna be a slight change to my stream schedule. So for now, I'm gonna be having the videos uploaded every single Monday, right? Which specifically, if you guys didn't know, or if you guys haven't seen it yet, but the CFO Streaming Watch Report technical analysis videos will be uploaded by Monday, and then I'm going to continue these streams on Tuesday, but a little bit earlier, right? 7:30 p.m. Pacific Standard Time or 10:30 p.m. Eastern Standard Time. However, I will not be going live on Thursdays for most of June. Okay, now I'll give you guys another update on that by the end of this month, but Tuesdays will be the only live stream days. Okay, you're welcome, guys. You're welcome. So thank you all for tuning in, guys. All right, so hopefully I can see you guys next week on Tuesday at the same time, 7:30 p.m. Pacific Standard Time or 10:30 p.m. Eastern Standard Time. Have a great rest of your night and good luck tomorrow.